that I've given to the panel has to do with product offering. I think there's been a lot of reevaluation over the past few years about the methodologies, the group-based, individually based lending. And my question to the panel is, currently, what are the limitations that you face in terms of your product offering, and what innovations do you feel the microfinance sector requires in order to facilitate greater market penetration, to facilitate scaling up?
For EBI, actually, we decided in lending that we should be in the income-generating loans. We are not willing to get into consumer lending. And for Egypt, we have a different situation, education, so financing education, it's not feasible in Egypt because this segment already have free education delivered. We think about home or house finance, but actually we want to direct this to be economically viable. So we think of creating certain areas for labor who work in the new industrial areas. This to direct to economic directions. For the other products, we hope we can do savings, we hope we can do insurance, transfers, leasing, whatever, but actually we are prevented from this. However, we try to maneuver this. We have a bail fund that covers some crisis, some death or disability cases. We created this fund internally to cover such cases as a step towards insurance. We are not allowed to do insurance direct, or we have to do it through one of the insurance companies, which is not our target. We think about a new product that could be a saving product, but actually it will be very costly for us. It's a sort of overdraft account that the client use to deposit whatever excessive money they have. It's cash management loan, but the transaction cost will be very high for us. We think about it. Maybe if we are not allowed for saving, we have to do it to maintain the cash management of our clients. It's sort that we said all financial products in Egypt are available for the poor through channel or another channel. But actually, none of these tools, the post office, the insurance, public insurance companies, leasing companies, and so deliver this to the poor people. We succeeded in delivering the credit products to create the culture of borrowing, and we ask the chance to deliver the other financial products to get the balanced security, financial security for our clients. But we hope to do it not in the near future, maybe in the next decade.
As I mentioned earlier, we are still a one-product operation, so we started with the microloan. Typically, MicroCred, when we start a greenfield, we start with the microloan product. But again, we usually diversify fairly quickly, depending on the needs of the marketplace, which we discover from the market research we do before we start our operations. In China, as I mentioned, the limitation is really from the regulatory side, because we have loan max limitations, so we're not really able to scale up like we would normally for a SME type product. And then the interest rate caps again, which I mentioned, is also a limitation. The other limitation, and I mentioned this briefly in my remarks, is the fact that only about 20% of our clients that we're working with in the Nanchang area have had prior experience with credit. So part of the process, as I said before, was to educate them about the utility of credit. And as we work longer in the marketplace and we develop our brand recognition and we build the trust of the marketplace, then I think we're seeing now, over the last few months, an increase in the demand for the loan products. But it's a process that we need to work sort of in tandem with on the regulatory side so we can get these limitations lifted. And be as creative as possible to satisfy our borrowers as best we can. So we will engage in some market research over the next few months to try and determine the best product next to try to introduce in the marketplace. It will likely be the SME loan, but again, because of the interest rate cap or the loan max limitation, we'll probably have to have a sort of a modified version of what we would normally introduce. The other issues that we're facing that affect sort of our operation, sort of from the product side, is the fact that salaries are quite low for most people in the Nanchang area, and so as the loan sizes get larger, we ask for either a guarantor or collateral, some sort of a guarantee, and oftentimes we're finding that the borrowers are having a difficult time finding guarantors to guarantee the loan. In some cases, they have to provide 2 or 3 or several guarantors, which is a risk for the company and it's also difficult for the borrowers. So these are things that we're trying to simplify. We've taken a little bit more risk, and we've relaxed some of our collateral requirements so we can try and be more user-friendly for the borrowers. The other issue is that because we're something new in the Nanchang area, the collateral registry, when we came to them, their hair stood up on their head and they didn't know exactly who we are, what we were doing, and why are we bringing all these borrowers with all their collateral, and what were they going to do with it. And so that is another reality that we've had to try and adjust what we do in terms of mitigating our risk, but also being user-friendly to our borrowers. But again, with time, as the regulations come in place, as we educate the borrowers, as we develop our brand recognition and our market position, I think things will work out. That's the optimistic me.
So this question I partly answered in my last slide where I put up a set of products that we're looking at. I'll just highlight there that arguably the most important non-credit product we think is insurance. For poor people who live in subsistence crises, any shock, whether that's a drought, a crop failure, illness in the family, puts them into a downward spiral of poverty that a credit product doesn't help them, get out of. And in the absence of savings, especially, microinsurance is clearly an area that we need to focus on. I'll give you just one example that something we've done at SKS is we have a health insurance product, and we had estimated, based on borrowers' interviews, that 18% of their income on average goes into a health crisis. So they mortgage their assets, they go around and they take these high interest loans, and on average borrowers were spending over a course of time 18% of their income. And obviously that is a significant amount of money. So we've been able to design a product, in this case with ICICI Lombard, that effectively works out to about 3% of their annual income that gives them cashless cover a number of hospitals. So there's just one example. Disaster insurance, we've heard about the earthquake. This in developing countries for the poor is quite a vulnerability. So that's where I would put the emphasis in terms of product. But I'll mention one other innovation, which I also think can sort of widely, radically change the way microfinance is done, and that is mobile banking. And clearly mobile banking, if we tag on to the mobile penetration, which is significant in these areas, the technology is out there to do mobile banking. It's not something that needs to be created. It's already there. It's low cost. You see the devices going into people's hands in rural areas. We have a mobile banking pilot going on as well. For regulatory reasons, again, related to savings, we can't roll it out. But where it has been rolled out, places like South Africa, Kenya, Philippines, you see that it radically changes the access to finance and the number of products that you can start doing on that particular device.